Investors and traders, welcome to the channel. Today is 14th of January 2024, and I hope everyone is having a great weekend. In this video, we are going to take a look at the key US stock markets. We will also take a look at the other markets, such as the bond market, dollar, some key currencies, gold, silver. We'll briefly cover crude oil, natural gas, and of course, we'll take in-depth look at the key US stock indices that we like to follow. As always, this video is for educational purposes only and it is not a financial advice. Now, next Monday, 15th of January 2024, is a holiday in the United States, Martin Luther King holiday, and I believe the markets have restricted hours. So please do check with your brokers if you're an active trader. And as for me, I will also be taking a day off tomorrow, and there will be no videos posted for the daily recap. I hope that will be okay, and from next Tuesday we'll just return to our regular schedule, and at the end of the market activity for next Tuesday I will do a recap for the that trading day. Now if you stick with us till the end of this video, then I will also give the next weekly standard deviation levels, and with that I will just dive deep into the markets. Now let's quickly go through how the markets actually performed last week. Now I like to take a look at a number of key markets because it's a big flow chart of cash. Cash begins to move from one market and begins to move in another market. So we really need to take a look at least briefly what the markets are doing, in particular the bond markets, the dollar, and also the precious metals which get impacted, and of course our stock market indices. Okay, so it's really good to see so many markets closing in green for the week. So the bond market, we are taking a look at the US 10-year Treasury note. It was up 0.78 percentage points. The long bond futures, which is the 30-year bond futures contract, also up about 0.69 percentage points. Dollar was flat, so was the Euro USD. So the dollar index is about 52-53% of the Euro USD. So kind of not exactly perfectly mirror image, but kind of mirror image, and we'll take a look at these charts in a while. Interesting one is the Japanese yen. It had some really strong gains where the US dollar was pretty strong against the Japanese yen, and last Thursday and Friday the Japanese yen began to gain over the US dollar. Now the GBP USD, which is also known as cable, this has been pretty stable, and on a daily basis it's been posting decent gains, especially in comparison with Euro USD. So the British pound is definitely stronger than the Euro USD past week. Metals, gold unchanged, silver pretty much unchanged as well for the end of the week. The energy markets, we're just taking a look at the crude oil and the natural gas. Very interesting market conditions at the moment, especially with crude oil, with geopolitical turmoil going on in the Middle East. One would have thought this would be bullish for the crude oil, but what we have seen is crude oil actually closed lower for the week. And on the contrary, the natural gas has been a really outstanding performer. Look, it gained pretty like 14.52% over the past week, and this could be just because of disruptions in logistics in the Red Sea part, but who knows, from a technical perspective, natural gas is a fantastic trading vehicle. Now let's quickly take a look at the US stock indices. So what we can see is the major indices closing in positive for the week, with the exception of Russell 2000 small cap, which is the only one which closed in red. Now we can see on the weekly closing basis, the cash S&P 500 index up 1.84% for the past week. The E-mini futures contract S&P 500 1.73%. Nasdaq has been the outstanding performer, 3.09%, and within Nasdaq the chip stocks, Nvidia, have done really well, and in the Magnificent Seven, Microsoft did really well, and I will put a link in the description and also towards the end of the video for the key tech stocks that we like to follow. I did a video for that yesterday, so please do watch that. That will give you more perspective from a technical analysis and pattern formation perspective for those stocks. Also, the Bitcoin. Now, the Bitcoin is a 24/7 market. What we see here is the kind of the snapshot I took when I was preparing for this video, and what we can see is that the Bitcoin, which had its ETFs confirmed last week, one would have thought would perform much better, but we have actually seen it close 2.2% to the downside, and the Ethereum has been actually a better performer. Okay, so after looking at this key chart for the major markets and how they performed on the weekly basis, let's begin to dive into the charts in the individual markets. Okay, so we'll actually start from the bond market. So let's actually start from taking a look at shorter term United States 5-year government bonds. This is something which we normally do not take a look at, as in we are really following the okay, I got the wrong chart, apologies. What I wanted to take a look at was on the yield. So this is the chart which is for the US Treasury note 5-year, and it is showing the yield. So what we see on the y-axis here on the right hand side, this is what this note is actually yielding, and where it closed last Friday, it was yielding 3.833%. And with the bonds, the price and the yield are inversely related. So what it means is, if the yield is moving lower, it means the price is moving higher. So I just wanted to show the yield chart. Normally we take a look at the price chart just to give a perspective on the shorter term end of the curve, how these interest rate instruments are moving. And what we can see is that it's just been moving down in a channel formation after having a really nice uptrend where the yields went as high as about 5% for the 5-year note. And since October of last year 2023, these have been coming down. And here I want to bring your attention to this is what we like to call the symmetry in the market, and here there is a bearish symmetry which has been in place since last year in October. What it means is that whenever the yields have rallied by this much, strong resistance has come in, and which has led to lower yields, or in other words higher prices for the instrument. And what we saw was towards the end of December, this is a daily chart, and in the beginning of the new year we saw a spike in the yields, in other words the rates expectations moving higher, and it just rallied to the exact amount what it had done in the previously. And after that the sellers came in and the yields began to move down, and where it is going now, it is just reaching that breakout area from actually it began to rally, and it just went to 23.6% Fibonacci retracement. This is something, a ratio which we normally don't take a look at, but in strong trending markets maybe it has some place. Now what is likely is if it is able to move below 3.788%, then what the next likely target could be 3.7% for the yield, and that is going to be this breakout area where it actually broke out from and had a fantastic rally which ended in October of 2023 last year. Now let's have a quick look at the 10-year bond futures. So here we go, this is the daily chart. And what we can also see is that just sideways price action for this. And the good thing is that it's just sideways, but last Friday and Thursday we see positive candles. And if you remember, last Thursday was the CPI data which came out hotter than expected, and then we had a PPI come in last Friday, and just on the slightly longer end of the yield curve, what we see the 10-year note doing is actually undergoing after intraday price action where there was a fair amount of volatility, especially in 30-year bond futures. We actually did close the day in the positive, which is good. So quickly taking a look at this on the weekly chart here, not the last week but the week before, which is when the new year started. The yields actually began to rise, and what we have seen last week is an inside bar formation. So next week is going to be key, whether this actually resume its rally or whether it's going to break the low of this bar, which would indicate higher yields. Okay, let's take a look at the excuse me, I got the wrong instrument, the 30-year long bond futures chart. In here, something that we have been watching for is the price action around the 61.8% Fibonacci retracement, and also this is the market symmetry, and currently the price has been actually moving above it, and now it has come a little bit lower compared to 61.8% Fibonacci retracement. Again, same as the 10-year treasury note, we are really watching this 121 level and how the market is going to trade. Now let's take a look at the dollar index. Okay, so this is the weekly chart for the dollar index, and what we see is that last week, it was pretty much dollar did nothing, and it formed this inside bar formation. This region, which is in this triangle box, is pretty good support for dollar index, but again, we'll have to wait and see whether it is able to move above the 102. So roughly speaking, 102.85, 103 level, that's where, in my opinion, probably more strength could come into the dollar index and the dollar. So taking a look at this on the daily chart here, what we can see is we have a well-defined channel formation right here, and we have strong resistance around the this level of 102.75 and 102.90. Roughly speaking, we can say even 103. That's the 38.2% Fibonacci retracement from the top, and 61.8% from this swing high to this swing low, and of course we have this channel formation here. So there's pretty strong resistance. By the looks of it, we should wait and see, because the market has just gone sideways over the last week. Whether it's going to break out of this channel and break out of this strong resistance and above 103, where we could have pretty good strength coming in the dollar index, or it goes and actually challenges this breakout area, and finally the breakout area around here. Again, 99 is the key point we are looking at, which the dollar index should break to the downside. For a clean break of it would indicate much lower dollar price. Now let's take a look at the Euro USD. It's pretty much a kind of a mirror image, because the dollar index has so much of euro as its composition, and here what we can see is here it's trying to attempt to move higher, but again really sideways price action. Also pretty something difficult to trade as well, in my opinion, but look at all these ABCD one-to-one price projections, which have worked really well in this. So again, this 61.8% Fibonacci retracement, 38.2% from these lows, pretty strong support. We will have to wait and see which direction the market is gonna move. If you were to put a gun to my head, I would guess that most likely the dollar is actually going to weaken, and we should see strength come in currencies like euro and the British pound against the dollar, but we'll have to wait and see for the confirmation. Now let's take a look at the Japanese yen. Here we go. So the Japanese yen is really interesting, because this is the daily chart of the Japanese yen, and what we can see is that it had rallied till this point, and this is where we had several of these patterns completing around here. And in fact, I had done a video where we were actually looking at this ABCD one-to-one price projection, and then there were some other smaller patterns completing around here as well, and we were really looking at this level as a very pretty strong support to come in, and it did. It actually what it has done essentially is it has gone and formed a double top. So you look at this point here, and we have a double top formation. a confirmed double top, and then what it has done is it has also done a micro double top with this one and this one, and then when it broke below this low, it was a confirmation. So what it is doing now is that it actually began to rally in a channel formation. It broke out of it, and now where it is, it appears to have a pretty good resistance coming in from this swing high, which is actually rejected last week. Now, in my opinion, if it begins to close below 144.33, then the chances are it's gonna go and retest this breakout area, and perhaps even come and retest this 137.35, which is the breakout area from here, and also structural support from here, and just below it is the 61.8% Fibonacci retracement from these lows. And right here where it has found support is basically the 78.6% Fibonacci retracement from this low here, and breaking below this would indicate the yen actually getting pretty strong against the US dollar. Quick look at the GBP USD. So here's the British pound, and what we can see is that actually British pound kind of in the sideways trading range, but nonetheless it's just been creeping higher and higher. Okay, now let's move to gold. So we are going to take a look at the gold through the eyes of the gold futures contract. This is the gold COMEX contract, the continuous contract using the TradingView data. And here some really interesting price action taking place in the gold in the daily chart. What we have seen is last Friday a big $20 move come in this market, and what did it do? It just went to the 61.8% Fibonacci retracement, and then it has actually moved a little bit lower. Now this could be because of some of the geopolitical actions that took place last Friday, for example. And what we have to really see is that there is quite a lot of supply around here. You look at this trend line here, the market rallied right into the 61.8% Fibonacci retracement, moved lower right into 61.8% Fibonacci retracement, and at this moment it has pulled back a little bit, but it hasn't really closed bearish at all in terms of the candle chart for that day. So we are really looking at this trend line here in purple, and it's some sort of triangle wedge kind of a formation, and if the bottom of this wedge is broken down, then that's going to be actually pretty not going to be good for the gold prices. And in that case, the first stop is most likely going to be around 1990 1988, which is the breakout point here, followed by this point here, which is going to be a key support level 1937 1940 on the futures contract, COMEX gold contracts, and then if that's get broken down, then the structure is changing, and we'll have to begin to look at it in a different way. And on the weekly chart, just wanted to show you this. All the longer term bullish for gold, and I did a really long term analysis for the gold, looking at the monthly charts, quarterly charts. But look at here, there's quite a lot of supply around here, so something to be aware of. Okay, so we'll have a really quick look at crude oil. Here we go. So the crude oil seems to be just really trading range, but quite a wide range, and one would have thought with the kind of the bullish for crude kind of geopolitical tensions, but the price action not supporting that's quite surprising, but that's why we look at the technicals and we look at the price, what the price is doing. Interesting one is this, the natural gas. Here look, here natural gas has been a really big bear market, and now it is attempting to rally, and looks like this might be the target here at 3.6, and on the daily chart, look, it's just went right up to the 78.6% Fibonacci retracement, which could be a resistance level, but it looks like it might be actually trying to attempt at 3.64, which is the top coming in from late October 2023 last year. So let's keep an eye on the natural gas. Okay, so now let's actually move to S&P 500. So we'll take a look at the daily chart of the S&P 500. This is the cash market, and here, so what we have seen is despite the CPI data coming in harder than expected, and the PPI, which I believe was kind of okay. I didn't pay too much attention to it, to be honest. Then the chances are that actually this pattern that we are looking at, 49.08, roughly 49.10, looks like the cash market actually might be targeting that, which would mean it would take out these highs and actually form all-time new highs. And perhaps this is something which the market actually might be waiting for, because we see a number of patterns being completed in some of the other indices like the Dow Jones. But looking at this one here, this is the weekly chart. Let me actually orient it like this. Look at this really nice line coming in from the COVID lows of March 2020. Beautiful, beautiful trend line. Again, on the weekly level, we have this ABCD in black completing around 49.20. So that's the kind of the region. 49.10, 49.20 is what we are looking at for the S&P 500, because here we also have the 1.618 expansion of the BC swing completing. So keep this in mind. Looks like the market actually might be heading towards it. We had a nice positive weekly close last week in the S&P 500 cash index. Now let's take a look at the S&P 500 futures. Excuse me, I got the wrong instrument. Here we go. So here the interesting thing is, we'll also quickly discuss our standard deviation levels that we had put out for last week, a week in advance. So just like we are doing the analysis now, I had put forward some standard deviation levels, and we were looking for the market to move within that range compared to the close of the last Friday. So again, what we see is on the +1 standard deviation 48.22, market did achieve that, actually went a little bit higher, and then what it has done is it has closed a little bit below that, but then really in the expected range for the +1 standard deviation. And on the S&P contract, what we are looking at is 49.45, roughly speaking, is maybe where the E-mini futures might be targeting. Now let's take a look at the NQ. This is the Nasdaq 100. This is the weekly chart for Nasdaq 100. Here 17,250. Looks like the market want to go and actually test this level. Now the Nasdaq 100 futures, it was really strong. In fact, in percentage point we had a look at, they were up about 3.09%. Pretty very strong compared to the other indices, and 79,250 might be kind of the target where it is looking to go. In terms of standard deviation, it actually broke above the +1 standard deviation, and in fact, let me take a look at the high again. 17,057. We were looking for 17,069 and a quarter for the +2 standard deviation, so right up there as well. Not exact figures, but again the standard deviations, the way I'm calculating these is a little bit approximate, so the actual depending upon the how the options data you are getting might be a little bit, you could get different figures. Again, close enough, and this is the kind of range we were expecting the market to move in. On the lower side, 16,378, which was quite a bit above our weekly -1 standard deviation. But on the daily, if you had been following our daily recaps, we were mentioning that how the daily standard deviation levels are moving. Okay, so that's good. Now let's take a look. Let's also actually take a look at the daily chart as well while we are at it. Here we go. Again, similar 17,250. Let's take a look at the Dow Jones, because the Dow Jones one is really interesting. This is the Dow Jones E-mini futures contract. This is the continuous contract plotted by the data from TradingView. And we have this ABCD pattern mentioned in red completed. We also have this 1.618 expansion of this swing from this to this right there. And the market has just gone nowhere last week and the week before. It's just trading sideways. But something to note, it has also not broken below this swing low here, which is 37,400 roughly speaking. And this is one of the markets which actually closed lower on the daily basis last Friday. Again, we have completed patterns here, and this is why, in my opinion, S&P 500 might have some movement to the upside. But again, this is not a financial advice, but someone who is long, maybe tighten up stops or you start using trailing stops might be not a bad idea. Again, just for educational purposes, not a financial advice. Okay, so let's take a look at this on the weekly basis. Here we go. So blue line, same ABCD pattern formation, 1.618. Finally, last but not the least, let's take a look at the Russell 2000. Stuck in a big trading range. Last week was an inside bar within this really nasty looking bar, a negative bar. And this is the one which has actually, in terms of standard deviation, I'm not sure. Yeah, it did actually reach the +1 standard deviation levels. Um, in fact, it had closed higher. Okay, so yeah, so I think the standard deviation minus standard deviation levels, it had met that. I'm not really sure about these. I'll have to double check this. Apologies. These might be from the week before. Um, where did this week close? Open. Okay, yeah, this look okay. I think, but again, I think look at this. It's just a trading range here. Standard deviation levels, I believe, from the minus one standard deviation, I believe it was able to meet that. Daily chart, finding resistance from the 38.2% Fibonacci retracement, just moving sideways. Could in fact get down to around 1920, which is the 38.2% Fibonacci retracement from this swing low to the highs of this swing high. Now, while we at it, let's take a look at Bitcoin. Okay, so we had some great news coming for Bitcoin, where the ETFs have been finalized. They started trading, and one would have expected maybe the Bitcoin would move higher, but in fact move lower. So there we go. Found resistance from this level. Maybe it has some more downside to it. And we'll just quickly do a really quick retracement to see what level we could have 38.2% come in. Okay, so it's below 23.6. Yeah, looks like it's going for 39,844, roughly speaking, about 40,000 level, and it'll be really interesting to see what happens to Bitcoin. So that's really interesting. Found resistance from this swing high and rotated lower. Okay, now finally, let's take a look at the standard deviation levels for the next week. Here we go. I'm going to bring that up from my other screen. Okay, here we go. So these are the standard deviation levels we are looking at for the next week. And again, I mentioned next Monday. It's a holiday and restricted hours perhaps for certain markets, but the rest of the world, international markets will have full day. But from experience, sometimes the volume in those markets could also be pretty low. And I will paste these in the description. However, the formatting is not really great. But you'll still be able to copy it, put it in Excel or some other spreadsheet like Google Sheets, and we'll be able to take a look at these. This is the weekly one. I'm not doing the daily one. I'll probably do the daily one for Tuesday. So because of the holiday, and here this is what we're expecting in terms of ranges for the S&P 500 E-mini contract, a symbol ES, Nasdaq 100 futures contract NQ, Dow Jones futures contract E-mini YM, and Russell 2000 futures contract RTY. So with that, thank you very much for watching the video. I hope you found it good information. And if you like our analysis, how we look at the markets and do the technical analysis using pattern recognition, Fibonacci ratios, including the retracements, extensions, expansions, price projections, then please do think about subscribing to the channel. And if you found this video of educational value, please do like the video. It's just a direct feedback for myself that people find the videos I produce of educational value, and it just encourages me to keep on producing more content for you guys. So thank you very much. Apologies, a bit of a longer video, but we had to cover a lot. And I hope you'll find it of good value. So thank you very much. Have a fantastic weekend, and good luck and good trading.